and welcome back to the channel, your go-to source for understanding the intricate world of hard-to-borrow stocks and potential short squeeze setups. Today, we're diving deep into a fascinating microcap that has recently appeared on our screeners, DXST, ticker symbol DXST. We'll break down why this stock is catching attention, what its high cost to borrow means, and what factors you need to consider. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on DXST. This is a micro-cap company, meaning it has a relatively small market capitalization, often making it more susceptible to volatile price movement. Its sector, while currently unclassified by our data, doesn't diminish the unique characteristics we're about to discuss. Looking at recent price action, DXST has seen a quiet period. Today's change is plus 0.0%, the last 5 days show plus 0.0%, and even over the past 30 days, it's remained flat at plus 0.0%. Volume tells a similar story, with today's volume at 0 shares and the 30-day average also at 0 shares. This translates to a relative volume of 0x average. Despite this lack of recent trading activity, DXST is showing up on our hard-to-borrow screener for some very specific reasons related to short interest. What is cost to borrow and why it matters? Before we get into DXST specifics, let's quickly define what cost to borrow or CTB really means. When a short seller wants to bet against a stock, they first need to borrow shares from a broker. Just like borrowing anything, there's usually a fee involved. This fee is the cost to borrow, typically expressed as an annualized percentage. Why does it matter? Because a high CTB means it's expensive for short sellers to maintain their positions. If a stock CTB starts to climb above 10%, 20%, or even into the triple digits like we're seeing with some names, it signals significant demand to short this stock but also a shrinking supply of shares available to borrow. This can put immense pressure on short sellers over time, as those high fees eat into their potential profits, or even turn profitable short positions into losing ones just due to the cost of holding. Why the stock is hard to borrow right now. Now let's talk about DXST. Our data shows a staggering annualized cost to borrow fee of 693.1%. Highlight number that's almost 700% per year just to hold a short position. While we don't have current CTB momentum or the exact number of shares available to borrow at this moment, this extremely high fee indicates that DXST is indeed very hard to find shares to short. The estimated float for DXST is 1.2 million shares, which is a relatively small number. A small float, coupled with high borrowing costs, can create a volatile environment if short sellers are forced to cover. Our internal composite squeeze score for DXST currently stands at 46.4 out of 100, which suggests a mid-range potential for squeeze mechanics based on its current metrics, despite the current lack of trading volume. Squeeze mechanics explained. So, how does a short squeeze work, especially with a stock like DXST? Imagine a short seller borrows shares of DXST and sells them, hoping the price will drop so they can buy them back cheaper later, return them to the lender, and profit from the difference. If the price starts to rise instead, or if the cost to borrow skyrockets like it has with DXST, these short sellers face increasing pressure. If the supply of available shares to borrow dries up further, or if the stock price moves aggressively upwards, short sellers may be forced to buy back shares in the open market to cover or close their positions. This forced buying creates additional demand for the stock, driving the price up even further, which then triggers more short sellers to cover, creating a cascading effect. That's the essence of a short squeeze. Dilution risk check. One critical factor to always consider with potential squeeze plays is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This typically lowers the price per share and can completely negate any short squeeze thesis, even if the cost to borrow is very high. For DXST, we've checked recent SEC filings and found no recent dilutive SEC filings such as S-1, S-3, or 424B forms in the last 90 days. This is a positive sign for any short squeeze potential, as it indicates the company hasn't recently flooded the market with new shares that could absorb short covering pressure. Furthermore, no recent reverse split was found for DXST within our look-back window. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Despite the compelling high cost to borrow for DXST, it's crucial to remember that a high CTB does not guarantee a squeeze. It can also signify that short sellers have very strong conviction in their bearish thesis and are willing to pay significant fees to remain short. Given DXST's current zero volume, the immediate catalysts for a squeeze are not apparent. What you would want to watch for is a sudden increase in trading volume. Joe volume chart. Any uptick in volume, especially on green days, could signal a change in sentiment or renewed interest, potentially putting pressure on those short positions. Also, monitor the cost to borrow itself. If it continues to climb or remains extremely high, the pressure on shorts will intensify. DXST presents an interesting case study with its exceptionally high cost to borrow of 693.1% and a tight float of 1.2 million shares. While current trading activity is non-existent, these underlying metrics highlight its potential for a short squeeze if market interest or catalysts emerge. Remember, understanding these dynamics is key to navigating the markets. If you found this breakdown helpful, please hit that like button, subscribe for more deep dives into hard-to-borrow stocks, and let us know in the comments what other stocks you'd like us to analyze next. Thanks for watching, and we'll see you in the next one.